Hello everyone, welcome to Smart Investing with Philippe. So we're going to go straight to the market update, which today I wanted to be focused of what mainly Jerome Powell has said during his today's speech. So we're going to use Grok and the AI to make a bit of a summary of the key, very important point that he was discussing today and what has been the main reaction on X, which is basically the public forum about everything that is happening in the world. So I think it gives us a good sense of what is the general feeling about what Jerome Powell has said and what has been the market reaction and so on. So let's be professional, but before doing that, please subscribe, push the like button and leave a comment to help me grow this community and make sound investment and sound judgment together, especially during this very tough time and this very volatile time and this very challenging time. So this is during this very, very difficult time that we recognize the real professional and the one who have a lot of experience and who have the nerves to stay on the ground, stay invested, stay firm into the conviction and follow the market every single day despite the extreme high volatility that you see and the extreme high uncertainty. This is not the first time, this is not going to be the last time, but again, we stay grounded, we analyze the fact, and then we decide what we're going to do next. Let's get into it. So, today we are diving into the Federal Reserve Chair Jerome Powell's speech at the Economic Club of Chicago on April 16, 2025. And what it means for the economy and the market. Let's break down the key point in a clear, engaging way, and then we will check out how the market participants are reacting based on the chatter on X. So buckle up. Key point on Jerome Powell's speech. 1. Economics slowing down but still holding. Powell kicked things off by saying the US economy is still in a good, solid position, despite some cracks showing up. First quarter GDP growth is expected to slow compared to the last year's strong pace, with consumer spending growing modestly. He pointed to strong motor vehicle sales, but noted that overall spending is cooling off and a rush of imports to dodge tariff might drag down GDP estimates. Second, inflation still a headache. Inflation is running above the 2% target of Fed, and Powell's tone was conscious. He emphasized the tariff, especially those pushed by President Donald Trump, could drive prices up. While he hoped an inflation spike is temporary, he didn't rule out becoming a long-term issue. His big focus is keeping inflation expectation well anchored and to prevent a one-time price jump to become into a permanent and persistent inflation phenomenon. Third point, his tariff is equal to big uncertainty. Trump tariff were major themes during Powell's speech. Powell called them a challenging scenario that could push the Fed away from its dual goals of maximum employment and stable prices. He warned that these tariffs, which are larger than expected, which lead to higher inflation, might lead to higher inflation and slower growth, potentially even stagflation, which means high inflation and slow growth. He didn't sugarcoat it. The Fed still figure out how to respond. And this is exactly at the moment when you see the market collapsing on your chart, I mean, today the market is very much down, Not like the 6-7% that we've seen in the past, but still a solid 3% down, Anyway, no rate cut anytime soon. That's the fourth point. So people were waiting for any rate cut being in sight. And if you remember on the last 3-day market update, I tell you this is very strange. The TLT is reacting like in a way that the market is not pricing any rate cut at all, which is went from 95 to 87. And this is what you get. I mean, if you were hoping for a hint about rate cut, Powell wasn't biting. He said the Fed is in wait-and-see mode, balancing its dual mandate, job and prices, amid high-end uncertainty and downside risk. The labor market is still near maximum employment, so there is no rush to ease policy. Translation, rates are staying put for now, and they're not going to decrease anytime soon, especially if he said he's expecting inflation to increase, which really makes sense, So as long as my take is that as long as the unemployment market is not weak, he doesn't see any unemployment meaningfully being higher or the job market being meaningfully weaker, he's not going to touch anytime soon the rate. That's for sure, definitely for sure. Markets are doing their things. Powell brushed off concern about recent market sell-off, saying markets are functional and orderly and doing what they're supposed to do, reacting to news. He also dismissed the idea that the Fed put the Fed stepping into saving falling market, signaling that investors shouldn't expect a bailout. So you get the Trump put and the Fed put. So Trump put, not Trump put inside. And the Fed just now say that don't expect a Fed put. They're not going to bail you out. So then we are alone on the market, We are alone with our investment and with our conviction and with our nerves to stand this volatility. 6th point is stagflation fear and political independence. Powell didn't shy away from stagflation risk, a combo of stagnant growth and rising prices that spooked markets. He also made it clear the Fed staying independent, saying, "Oh, independence is a matter of law," despite political pressure to cut rates. I personally doubt that the Fed is very apolitical. I think they lean more on the Democrat side. I mean, this type of very blunt and a bit like fear-mongering speech is very unusual for the Fed, especially when the Democrat was in power and there were a lot of things to talk about. I never really heard the Fed being so fear-mongering that it is today. So I think they are definitely political, and they want to exacerbate the fear and uncertainty by having this type of fear-mongering speech that the Fed was giving today. Definitely, the Fed is more leaning toward Democrats, and Jerome Powell is definitely more leaning toward Democrats. And you cannot be blind to just say this, And he's not taking side, It's just a matter of fact. Jerome Powell is a Democrat. He's a Democrat-leaning politician. And what he has said today is basically to put fuel on the fire of fear, because he wants things to get worse, because politically disadvantage the Democrats. That was my very deep feeling when I was hearing and listening to him during that Chicago speech. And this is also my personal takeaway from that speech today. So that he did wanted to scare the market, and he did wanted the market to be more volatile and more uncertain and more angry toward what Donald Trump is doing. Market reaction and sentiment on X. So now let's talk about how market participants are feeling on X based on the post on X, the vibe, the frustration, the pessimism, and also a whole lot of unease. Market sell-off intensifies. Of course, after Powell's speech, market took a hit. The S&P 500 dropped 2%. Bitcoin fell below the $84,000. Ex-user noted that Powell cautious and non-committal tone, especially on rate cut, rattled investor already nervous about tariff and economic slowdown. Second, disappointment over no rate cut signal. Of course, that's the big elephant in the room. Many on X expressed frustration that Powell didn't hit that loosening monetary policy. With inflation stubborn and tariff looming, users feel the Fed stuck in a tough spot, and the lack of clarity isn't helping at all. Then stagflation worries take center stage. Powell mention of stagflation risk hit nerves. Experts highlighted fear of a recession, with one user paraphrasing Powell as saying, "We are all fucked," pointing to slower growth and worse inflation. The word stagflation is trending, and it's spooking traders. That's why he said the word stagflation. I mean, I challenge you to tell me, when was the last time the Fed specifically wanted to spook the market by using the stagflation word? I think it's a long, long, long time. I don't even think that during COVID and during the 2022 or during the great financial crisis, they had such spook language. It's very astonishing to me to listen to his speech today. Tariff anxiety. Trump tariff are a big driver of the negative sentiment on X. Users are skeptical about Powell's ability to navigate this challenging scenario, with some saying he's focused on distinguishing one-time price hike from persistent inflation, Fed-like hedging bets. Exactly, they don't know. They didn't know last time about persistent inflation. They were saying, if you remember, they were talking about temporary inflation, when actually it was more like a permanent inflation. So these people don't know. They are navigating also as we do, and they pretend to be more expert or more, they have more insight about what will happen. They don't know, They're also playing politics, and they're also playing the cards, and they don't want to take any more. They don't want position. They don't want to take risk. They prefer to tell the worst case scenario. So if things get better, then they get the credit, and if thing gets to the worst case scenario, they will tell you, "Hey, we've told you this." That's what my feeling was about this speech. Skepticism about Fed plan. The X conversations show a split. Some users respect Powell's data-driven approach, but other things is too vague. Yeah, that's the point. He's too vague, but for some of the words, he's very, very blunt. Like talking about stagflation. I mean, it's not being vague at all. One post call is tone more cautious and concerned than before, suggesting the Fed is worried it's losing control of inflation and growth. Overall, the sentiment on X is bearish, of course. Bearishness in the market has not been is never been so high since probably the last 20 years. I mean, this is crazy, the level of bearishness we are reaching in the market for just this tariff talk and this negotiation. I understand this is very scary, but remember COVID. I think COVID for me was much more uncertain. The global financial crisis, we almost see the whole financial system collapsing. For me, it was much worse than today. So why are we reaching the same level of fear and the same level of uncertainty and the same level of anxiety than the global financial crisis or the COVID time? I cannot understand. It's not the same level, you know. But anyway, all the barometer of fear, all the barometer of uncertainty is pointing to the same level as the COVID time and the financial crisis time, great financial crisis time. So which to me is very, 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 I would say very puzzling, you know. Okay, overall the sentiment of X is bearish. Investors wanted reassurance and a clear path to forward, but Powell's speech left them with more questions than answers. Stock are sliding and the crypto market is unhappy either. Of course, today, the Fed didn't want to reassure the public. They didn't want to reassure the investment community. What they wanted to do, and as I told you, they wanted to spook the investors, they wanted to spook the public, and they wanted to add more uncertainty to the uncertainty and more bearishness to the already bearish market, you know. That's what my overall feeling went from the speech. He wanted to exacerbate all the negativity and the uncertainty, and I think he just managed to do that. He did it on purpose. Why this matters? Powell's speech underscore a tricky moment for the Fed. With tariffs steering up inflation and slowing growth, the Fed walking in a tightrope. No rate cut means borrowing costs stay high, which could squeeze businesses and consumer. Meanwhile, stagflation fear are real. Markets hate uncertainty. Of course they hate uncertainty. I hate uncertainty. You hate uncertainty. For everyday folks, this could mean higher prices at the store and slower growth job market, something to keep an eye on. So let's wrap up what happened with Jerome Powell. So there you have it, Powell April 16 speech in a nutshell. He is playing it safe, warning about tariff inflation, stagflation, while keeping rates steady. Markets not real, and X is buzzing with worry and bearishness. What do you think? Will the Fed pull off a soft landing? What do you think? Will the Fed pull off a soft landing, or are we headed for rougher waters? And we're going to go for much lower lows than we actually witnessed just 1 week ago. What is your bet? Leave me your comment below. Drop your thought in the comments and hit that like button and subscribe for more updates. See you next time for another market update.